Good morning, everyone, and happy Thursday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here. This morning we'll be taking a look at exciting stock market news, notable earnings reports, and the morning's biggest gainers and losers. Don't forget that TipRanks is now offering a monthly payment plan for their ultimate and premium subscriptions. So if you've been considering unlocking some fantastic research tools, now is the time to do so. Make sure you visit the link in the description down below. Now let's get right into this morning's exciting stock market news. U.S. stock futures are in the green this morning. Currently, Dow futures are up 0.5%, S&P 500 futures up 0.55%, and NASDAQ futures up 0.58%. Tesla has tripled their monthly output at their Shanghai plant in China. They produced 33,544 cars in May versus 10,757 back in April. This comes as the company restored some production at their Shanghai plant in a closed-loop setting amongst COVID restrictions. They had workers isolated and living at the plant, and they came back around the middle of the month. Analysts rate the Tesla stock a moderate buy with an average upside of 25%. At their Investor Day yesterday, Spotify's chief executive said that he sees Spotify's top line growing to $100 billion annually within the next 10 years. This compares to their current revenue of $11.4 billion in 2021. He also expects margins to improve to 40%. Spotify has been ramping up investments, betting big on podcasts and audiobooks as well. They'll offer new types of content over the next decade, and they're on track to hit 1 billion users by 2030. They say that they currently have 422 million monthly users. Analysts rate the Spotify stock a moderate buy with an average upside of nearly 30%. And Spirit Airlines has postponed their shareholder meeting that was scheduled for tomorrow to vote on the Frontier Group's merger deal after JetBlue sweetened their deal. Frontier recently added a breakup fee of $250 million, while JetBlue recently upped their breakup fee to $350 million. Spirit said it needed time to reevaluate both proposals and take the necessary actions. Although Spirit's board is in favor of the Frontier merger, their proxy advisory firm is in favor of creating a low-cost carrier behemoth by joining hands with JetBlue. The Spirit Airlines stock under the ticker SAVE is currently rated a hold with an average upside of nearly 13%. Now moving over to notable earnings reports. In the after hours today, we'll be hearing from DocuSign, Stitch Fix, Vail Resorts, and Rent the Runway. So make sure to check out Fabio's after hour market recap to hear all about those. Already in the pre-market this morning, we heard from Chinese EV maker NIO. They did post a narrower than expected loss, but shares are falling after first quarter margins declined. NIO reported a loss per share of 13 cents, beating analyst estimates by 3 cents. They had revenue of $1.56 billion, which was up 24% year over year and ahead of analyst estimates. However, their gross margins in the first quarter came in at 14.6%. This was compared to 19.5% in the previous year. They attributed the drop to a decrease of vehicle margin and the reduction in other sales margins resulting from the expanded investment in power and service network. Analysts currently rate the NIO stock a strong buy with an average upside of 100%. We also heard from FuelCell Energy, who did miss analyst estimates on earnings. They reported a loss of 8 cents per share when analysts were estimating a loss of just 6 cents per share. They did report revenue of $16.4 million, which was up year over year from $14 million, but a gross loss of $7.3 million compared to the loss of $4.8 million the year before. Analysts currently rate the stock a hold with an average upside of 44%. And also missing on earnings is Chinese video sharing website Bilibili. They reported a loss of 66 cents per share, wider than the estimated loss of 62 cents. They did have revenue of $796.2 million, which beat analyst estimates of $751.9 million. Revenue grew 33.7% on a year-over-year basis. The stock is currently rated a hold with a slight downside of 1%. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by Renew Energy Global after analysts boosted their earnings expectations. Under the ticker RNW, the stock is currently up about 8.4%. They're followed by Signet Jewelers under SIG up 7.6% and Hudson Pacific Properties under HPP up nearly 5%. Our biggest losers this morning look to be led by Kinetic, but they actually just went through a 2-for-1 stock split, so it's actually Forge Global Holdings after they issued a common stock offering. Under the ticker FRGE, the stock is down nearly 15%. They're followed by Bilibili under the ticker BILI, down over 10%, and Five Below under the ticker FIVE, down 7.6%. So that is going to be everything for Thursday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.